question. But let's see how things play out today. Things are likely to be governed more by technicals because we are in expiry week. So it's the technicals of the market that will be important. Let's invite the technical expert then. Dr. cknarayan, Managing Director at Growth Avenues, joins us this morning. Good morning, Dr. Narayan. Good to have you with us this morning. What's the feeling you're getting about the Nifty and the Bank Nifty? Is it looking like there is going to be greater and greater resistance at higher levels like we saw yesterday evening?
Yeah, I think we ran up into a well-defined resistance around 8,050-60 levels, and the market, I think the bulls were found a little wanting in their willingness to push the market higher. That's speaking for the Nifty. The Bank Nifty, on the other hand, seems to be a little more resilient and more willing to sustain the gains made through the last week when we had fairly rapid upward movement. And if you also add to that the third tradable index, which is the CNX-IT, I think that is the one which is actually taking it a bit on the chin. And it's going down with a gap, and even the trading as of yesterday seemed to be rather soft and more indicative of some more declines to come in that index. So if you line up the three tradable sets of indices, I think clear trade is available in CNX-IT to the downside. The Bank Nifty is a buy on a dip to, let's say, about 16,300 levels where there is well-defined support. And the Nifty is a bit of a touch and go because it's dropped down sub 8,000. Today morning's trade on the SGX seems to indicate that we might probably begin above 8,000. Now the question is whether it will sustain there and try to build up. We do need to see it proceed much above 8,060 for the bulls to make a comeback, in which case I think there is room for another about 100-150 points. So we might make it till about 8150 or thereabouts before we run into the next lot of resistance. On the downside for the Nifty, we have a huge gap support area which lies in the region between 7950, 60 all the way up to around 8,000, 8,020. That's where the Nifty has actually come down to the top of the gap. Now it remains to be seen whether the day's trading will see a drip down to the lower level of the gap. I don't believe we will go much below 7960, mainly because we are not really kind of reflecting local cues here. We seem to be oscillating around more of global cues, and like you just mentioned, if the rest of Asia has opened in the green and we are also likely to start off better with no specific bearish cues around, I think the Nifty might actually want to hold on to the support. So therefore I would pitch my tent on 7960 being held and the Nifty attempting an upward move from there on. Bank Nifty, I remain a buyer on a breakout above 16,600 thereabouts. So it's a buy on dip, it's a buy on a breakout as well. CNX-IT, clearly there is room on the downside till about 10,400.
Okay. Dr. Narayan, hi, good morning. You just said that there is room on the downside for the CNX-IT. So in terms of individual stocks, are there any shorting opportunities in the IT heavyweights?
Yeah, it does seem that way because if you see the leaders, bar maybe Infi, have not really been trading very well. You have Tech Mahindra results due out, I think today or tomorrow. And maybe that is another result that the market will look at. The other results of the main ones are out, and market, with the exception of Infi, as I said, has not really received them very well, despite the fact that they have not been, so really bad that the market should push everything down. TCS, for example, went down with a gap, and that's what really is causing the problem for the CNX-IT. HCL Tech is another one which is somewhat poised a little bit bearishly. But that said, I must also say that this entire bearishness that we are talking about is all across the short term, because if you raise your perspective and look at the weekly and monthly charts for Nifty and Bank Nifty, they are far from bearish. So we are really talking about very short term here. But if you look across a larger perspective, then the kind of damage that we have seen despite the drop to 7750 and all that, is hardly anything. It's not denting the, the bull trend at all. Okay, the CNX Nifty might see a little bit of reversal. So TCS, HCL Tech, I would wait for the results of Tech Mahindra that has been in a habit of springing a surprise every now and then. And these are the two where I might look for a little bit of short along with Wipro.
Okay, the other stock that's kind of defied gravity has been BHEL. From, I think, 197 low about a month back, it's been a one-way street to 250 thereabouts. Where does resistance come in? Should one still play long?
I think BHEL has been, climbing very steadily because of a high degree of skepticism. And when the results came, the stock got bashed down. But like you mentioned, again, that 197 low, it actually made a higher bottom, somewhere around 205 to 207. And then subsequently, the stock has really been building higher bottoms, which is a clear indicator that long-term buyers are probably stepping into the stock. And as it were, we are seeing some noises or green shoots being envisaged in the capital goods area. And we are seeing several other, even the small cap, mid cap area in the capital goods area, seeing some amount of upward traction. So I think lots of people are still very skeptical about the prospects of BHEL. But then there seems to be some very determined large-scale buyers who are there, and I think they will probably carry the day. So I wouldn't really bet on any upward resistance right now. I would look for any big dip, any, let's say, market-led dip which brings about a reaction in BHEL and use that to buy.
Right, so finally then, Dr. Narayan, if you had to give us 2 or 3 stocks to buy today, apart from the ones that we just discussed, what would they be?
Well, I think market is really gyrating to news flows, right? So news flow currently is by way of, the numbers which are being really described. And I think among that we have 2 big wigs today, both from pharma, Lupin and Ranbaxy. And I would really go right now in the market on a day-to-day basis, because there really is no sustained trend happening anywhere in any sector or even in any particular stock. So I think what we need to play is news-led momentum. Lupin and Ranbaxy are both in a kind of a range with slight contrarian setup. Lupin is struggling against the higher end of a range and above 1400. If the results were good and were to trigger an upward spike above 1400, Lupin would remain a buy and head out considerably higher, probably about $100 at the minimum can be added. On the other hand, Ranbaxy is trying to butt against the lower level support, which is very near at about 585. Given the fact that the next support in Ranbaxy is quite a way off, I would not really hesitate to take an exit from long positions if something were to be adverse or the stock's reception to the numbers were to be adverse. So the approach would be a little different for Lupin as well as for Ranbaxy. I would be gladly a buyer in Lupin on a breakout because there is strength and the stock seems to be indicating that. Ranbaxy is iffy. It's trading up against near its all-time high at about 600, 625. So even if it were to survive and try to build on the lower level of support of the range, I think 625.30 would be the max that I would look at for the day or two here. Subsequently, we can take a call if it were to show continued strength. But range between 585 to 625 for Ranbaxy with a definite exit call from longs below 585. A breakout buy in Lupin above 1400 levels, and those would be the 2 main picks.
All right, Dr. Narayan, it was a pleasure hearing you early morning. Thank you very much for joining us with your perspective.
Thank you.